Bitcoin is once again capturing the attention of investors worldwide as it positions itself for a potential new all-time high, fueled by a powerful resurgence in spot exchange-traded fund inflows that signal robust institutional confidence returning to the cryptocurrency market. In recent weeks, U.S. spot Bitcoin ETFs have recorded their strongest performance streak of 2026 so far, with consecutive days of positive flows reversing earlier periods of outflows and injecting fresh capital that could tighten Bitcoin's available supply dramatically. This development comes at a critical juncture for the asset, which has shown resilience amid broader market fluctuations, hovering in the range of approximately $77,000 to $80,000 while building momentum for a decisive breakout. Welcome to Crypto Hub, your trusted source for in-depth analysis of cryptocurrency markets, blockchain innovations, and the evolving dynamics shaping digital asset investments. Today, we delve into the latest surge in Bitcoin ETF activity and what it means for the cryptocurrency's trajectory toward fresh record levels. The story begins with a notable shift in institutional behavior that has unfolded rapidly in April 2026, after experiencing several months of net outflows earlier in the year, which coincided with Bitcoin pulling back from its previous peaks above $120,000 in late 2025, the spot Bitcoin ETFs have staged a remarkable turnaround. Data indicates that these funds logged 8 consecutive days of inflows through April 23rd, accumulating roughly $2.43 billion for the month so far, nearly doubling the inflows seen in March. This momentum has not only flipped year-to-date flows into positive territory, reaching approximately $1.85 billion to $2.3 billion depending on the exact tracking period, but has also pushed lifetime cumulative inflows closer to their all-time peak, currently sitting around $58.55 billion to $58.97 billion. Such figures underscore a renewed appetite among large-scale investors who view Bitcoin not merely as a speculative play, but as a strategic portfolio diversifier in an environment marked by economic uncertainties and evolving monetary policies. At the forefront of this inflow surge is BlackRock's iShares Bitcoin Trust, commonly known as IBIT, which has dominated the landscape with commanding market share. On April 23rd alone, IBIT captured about 75% of the day's total inflows, contributing significantly to the overall $223 million recorded across all spot Bitcoin ETFs that day. Year to date, BlackRock's fund has added over $3 billion, with holdings now surpassing 800,000 Bitcoin, representing roughly 3.8% of the total Bitcoin supply. This concentration of capital in a handful of premier funds like IBIT, alongside strong contributions from Fidelity's Wise Origin Bitcoin Fund and others, highlights how institutional players are methodically accumulating exposure. Analysts point out that the past 8 trading days alone saw these ETFs absorb approximately 19,000 Bitcoin, a volume that is about 9 times the amount newly mined during the same period. This imbalance creates what many describe as a supply shock, where demand from regulated investment vehicles outpaces the slow, predictable issuance from miners, potentially laying the groundwork for upward price pressure as available liquid supply diminishes. Bitcoin's price action has mirrored this institutional optimism to a significant degree. Having rebounded from lows around the $60,000 to $70,000 range earlier in the year, the cryptocurrency has climbed toward the $76,000 to $80,000 zone in recent sessions, with some reports noting breaks above $76,000 amid the weekly inflows approaching or exceeding $996 million to $1.9 billion in shorter bursts. As of the latest market updates, Bitcoin trades in the vicinity of $78,000 to $79,000, showing modest daily gains while testing key resistance levels near the $80,000 psychological barrier. This recovery represents a notable 23% gain from February lows in certain analyses, driven in part by the ETF momentum and broader risk-on sentiment influenced by geopolitical de-escalations, such as developments around U.S.-Iran relations that have eased some macro tensions. Yet the path has not been entirely linear. Periods of consolidation and minor pullbacks have tested investor resolve, reminding market participants that volatility remains an inherent feature of this asset class, even as institutional flows provide a stabilizing undercurrent. the mechanics behind these ETF inflows reveal deeper structural changes in how capital enters the Bitcoin ecosystem. Unlike direct spot market purchases, which can be fragmented and influenced by retail sentiment, spot Bitcoin ETFs offer a regulated, accessible gateway for traditional financial institutions, pension funds, wealth managers, and even corporate treasuries to gain exposure without the operational complexities of self-custody or wallet management. This has democratized access while simultaneously concentrating buying power in vehicles that must physically acquire and hold Bitcoin to back their shares, thereby removing coins from active circulation on exchanges. BlackRock's IBIT, for instance, has not only led in flows, but has also elevated its status among US-listed ETFs, ranking in the top 1% by flow metrics, and boasting assets under management that place it alongside elite traditional funds. Fidelity's FBTC and Bitwise's BITB have contributed meaningfully as well, with the collective effect being a steady absorption of Bitcoin that counters selling pressure from other sources, including occasional outflows from legacy products like Grayscale's GBTC, which has seen more mixed performance amid fee structures and conversion dynamics. Experts and market observers emphasize that this inflow streak is more than a short-term phenomenon. It reflects a maturing institutional narrative around Bitcoin. Following the approval and launch of spot Bitcoin ETFs in early 2024, initial enthusiasm drove massive early inflows, but subsequent cycles of profit-taking, regulatory scrutiny, and macroeconomic headwinds led to periods of distribution. The April 2026 resurgence marks the first sustained positive monthly performance in several months, ending a streak of outflows that had weighed on sentiment. Bloomberg analysts and others tracking the data note that the funds have now turned positive across daily, weekly, monthly, and year-to-date timeframes for the first time in 2026, a technical milestone that often precedes broader market rallies. Furthermore, the inflows are occurring against a backdrop of Bitcoin's halving cycle effects, where the reduction in new supply from mining events continues to exert long-term bullish influence, with daily ETF net inflows averaging around $110 million in April and occasional spikes exceeding $300 million to $600 million on strong days. The stage appears set for a potential retest of prior highs if momentum sustains. Delving deeper into the implications, the surge in ETF activity could catalyze a new leg higher for Bitcoin by amplifying scarcity dynamics. Bitcoin's total supply is capped at 21 million coins, with approximately 20 million already mined as of now. As ETFs and institutional holders lock away hundreds of thousands of BTC, the free float available for trading shrinks, making the asset more sensitive to incremental demand. Historical parallels are instructive here. Previous periods of strong ETF inflows, particularly in late 2024 and early 2025, coincided with Bitcoin's climb toward and beyond the $100,000 mark, eventually peaking near $126,000. While current levels remain below that zenith, the combination of renewed flows, improving year-to-date metrics, and Bitcoin's demonstrated ability to decouple somewhat from traditional risk assets during certain phases suggests analysts' optimism is grounded. Some forecasts point to potential targets of $93,000 or higher in the near term as a critical technical level to reclaim, with longer-term projections from firms like Epoch Ventures envisioning $150,000 or more by year-end, contingent on sustained institutional participation and favorable policy developments. It is essential, however, to approach this narrative with balanced perspective. Not all signals are uniformly bullish, and risks persist. Geopolitical developments, interest rate trajectories set by central banks, and potential regulatory shifts in major jurisdictions could introduce volatility. For example, while some reports highlight reduced correlation with equities, Bitcoin still navigates a global financial landscape where bond yields, inflation data, and fiscal policies exert influence. Moreover, while inflows dominate headlines, isolated days of modest outflows or flat performance remind us that capital flows can ebb and flow with market sentiment. Grayscale's products in particular have experienced ongoing redistribution in some cases due to higher fees or investor rotations toward lower-cost alternatives like IBIT. Retail participation, which often amplifies moves in either direction, has shown caution in recent periods, with some observers noting a shift from fear to greed metrics that could fuel FOMO-driven rallies if price breaks key levels decisively. Technical analysis reveals important support zones around the $70,000 area, with resistance clustered near $80,000. A sustained breach of the latter could open pathways toward new all-time highs, but failure to hold gains might lead to retests lower. Beyond the immediate price implications, the ETF phenomenon is reshaping the broader cryptocurrency ecosystem. It has brought unprecedented transparency and legitimacy to Bitcoin, attracting commentary from traditional finance heavyweights who now routinely discuss ETF flows alongside stock market metrics. The total assets under management across spot Bitcoin ETFs have climbed back toward peaks, with collective holdings representing a meaningful percentage of Bitcoin's market capitalization. This institutionalization process extends to secondary effects, such as increased liquidity in derivatives markets, greater media coverage, and even spillover interest into related assets like Ethereum, though Bitcoin remains the clear leader in flow dominance. Companies and funds exploring Bitcoin treasury strategies or tokenized exposures further amplify the network effects. In essence, every dollar flowing into these ETFs not only buys Bitcoin, but also reinforces the infrastructure supporting its long-term adoption as a store of value akin to digital gold. Looking ahead, several factors will likely determine whether Bitcoin successfully eyes and surpasses its previous all-time high. Continued inflow streaks, potentially pushing cumulative figures past the $60 billion lifetime record, would provide strong tailwinds. Macro catalysts, including any softening in monetary tightening or positive regulatory clarity from bodies like the SEC under evolving leadership, could accelerate adoption. On-chain metrics, such as declining exchange reserves and rising holdings by long-term investors, complement the ETF data in painting a picture of accumulation. Conversely, external shocks ranging from unexpected inflation prints to shifts in global risk appetite could temper enthusiasm. Market participants are closely watching options positioning, which currently reflects balanced but uncertain probabilities for extreme outcomes by year-end, underscoring the need for disciplined risk management. In summary, the recent surge in Bitcoin ETF inflows represents a pivotal development that bolsters the case for a renewed push toward new all-time highs. With institutional capital flowing consistently, supply dynamics tightening, and price action demonstrating resilience, Bitcoin stands at an inflection point that could define its performance through the remainder of 2026 and beyond. While challenges and volatility are inevitable in this nascent but rapidly maturing asset class, the underlying fundamentals supported by regulated investment vehicles suggest a constructive outlook for those positioned thoughtfully. As always, investors should conduct thorough due diligence and consider their individual risk tolerances when engaging with cryptocurrency markets. Thank you for joining us here at Crypto Hub for this professional update on Bitcoin's latest momentum. Stay informed with us for ongoing coverage of market developments, ETF trends, and strategic insights that matter in the world of digital assets. Subscribe, like, and share your thoughts in the comments below. We value the Crypto Hub community and look forward to bringing you more timely analysis in our next update.